Hello and welcome back to Dukascopy TV. As usual on a Monday, I'm joined by Jean-François of Owczarczak to discuss some of your favourite currency pairs. Jean-François, thank you once again for coming in.
Hi Monica, thanks for having me back.
Now we're looking at the usual suspects once again, most of the favourite pairs against the dollar. Now we've seen a bit of a reversal. I guess the question is it sustainable or not? What are the graphs telling us today?
Okay, well we're going to have a look. So we're back in the Dukascopy directory on our Fingraphs website, and we're going to have to look at the mosaic and visualize this, the beginning of this reversal. So first you see that the euro turned down. You had a stress situation with our risk index, which was in the red, and the envelopes touching each other. Similar situation on pound sterling, reverse situation on dollar Swiss and on dollar yen. And the Australian dollar, which was attempting a correction up, is in a resumed downtrend, which was quite drastic and moving lower. Now we're going to quickly focus on the euro, as it's been a main driver of all this. And if we look at the weekly and the daily, well, they're still in a slight uptrend. Now, I just want to emphasize that these uptrends are more of a sideways situation than an uptrend. So let's focus on the weekly. Well, you see, we're in a correction up since 2010, and the envelopes are very much flattish. It's only a correction up, so it's not a new strong uptrend. So it is still a dangerous environment over the next few quarters. Now, if we look at the daily, similar situation, quite sideways, had corrected up from tops, resumed the uptrend to try to create a new move. And last week I was stressing that the envelopes were touching each other, the risk index was in the red, and it might be quite a dangerous situation. And that's why I came to the conclusion that, given all the news that was going to get out last week, the risk reward was probably better to the downside than to the upside. Well, basically the news did move the euro lower. If you see, we had quite a strong exaggeration here on the risk index, and the envelopes were touching each other. It's still just a correction for now, meaning that we would really need to make it below these corrective targets to create something bigger. We believe that's probably going to happen, and it could last at least a few weeks. And the trigger point here is 130.85. So as long as we stay above it, we're still just in a slight correction. If we make it below that, we could expect a stronger move down.
Okay.
Now that's for the euro. If we go back to the mosaic, I wanted to also stress dollar yen. We had a huge move beginning of the year. We had thought that it wasn't over, but that we were in a strong intermediate top. We did have quite strong exaggerations here. Our price targets are still showing that there's potential there. Probably another 10 figures to the max, which seems a lot actually, but we've already done quite a long ways. Stress point, there's probably a bit more work to do, but over the next few quarters, we think dollar yen is going to be able to make a new move. Now let's look at it on a shorter term basis. Also here in a correction down, which was quite strong. We never really made it into an impulsive move down. So we would expect that slowly this move would resume its uptrend and create a new uptrend. Now, if we look at the hourly, the trigger point here, similar to the euro, we'd really need to make it above 98.75 to have an acceleration or to be in an impulsive target. So the question is still out, and we will be watching these levels very, very closely this week. What we could say is that envelopes are slowly moving up. The risk index was an exaggeration, is slowly moving up. We're basically waiting for confirmation on dollar yen and on the euro this week, making it through the corrective targets to create a stronger move.
That will be the big step there. Now, if we look at gold, I think if we take that next, the question seems to be, it's been on our lips for a few weeks or maybe even longer, is there immediate bottom on the horizon? So an intermediate bottom, well, we've been saying that over the longer run, over the weekly, we had gone through this spring the corrective targets down, which opened the door towards quite aggressive impulsive targets in the 900 to 1130
level. Bear in mind that this has gradually been going down as our envelopes on which we calculate the targets are volatility based. So the more volatility you have, the more drastic are the targets. What we could say here is that there's still a lot of time left, several quarters, that there's still some potential down left, and that for the time being we're slowly approaching the oversold zone, but it's still much too early to call an intermediate bottom on the weekly. Now on the daily, it's probably different. As you see, the exaggeration here is very, very strong on the risk index. The targets down have been done. We were pointing around 1290. There's still a bit more time left, and we still think there may be a last sell-off, and we still need to be careful about it. But over the next few weeks, we should be able to create an intermediate bottom. And given the large volatility, it might be quite a bounce. It can last several weeks to a month, but we're not quite there yet, so we will have to monitor that closely. Looking at the hourly, well, as long as the hourly is heading down, there's no point taking any risk here, and so we probably need it to first create a corrective move up, and then once we go through the boundaries of this corrective move up into an impulsive move up, that'd probably be a good, more stable or more a better point to enter gold for a correction. But for now, even on the hourly, although we're very much oversold, there still seems to be a bit more time left.
Okay, so it looks as though there might be a few interesting steps, but we will update it next week. Thank you once again for coming in.
Thank you very much.
Thank you. Well, that's all from Jean-François and myself for the moment. Click back to Dukascopy TV for all the hourly updates. Goodbye for now.